You're listening to Wall Street Breakdowns, This Week on Wall Street podcast, starring Cody, Anthony, and the stock market. This Week on Wall Street is the podcast. You're Anthony, I'm Cody. We're here from Wall Street Breakdown, but unfortunately, the markets are still pretty much drummed into the fact that it's going to be trade, and if that's going to be the only conversation we have. Earnings season is over, the markets aren't doing much. We talked last week, sell and may go away, and now you find yourself kind of grasping at news. So the little bit of news that's out there seems to be changing the market frequently on minor news, right? That seems to be the catalyst.
That has been, yeah. There's
right?
not huge news.
There's nothing really going on.
No.
How was your week? The markets were the same. We'll go into that.
Yeah.
But how was your week?
I had a great week. No complaints. A lot of sun out. So,
Yeah, it was beautiful, right?
How was your week?
It was good, man. Lots of gym. We got in the gym lots.
A lot of cardio.
Whew, we did legs today. I did not think I was coming out of legs okay.
No. I think it was dead after that.
I was pretty sure that was going to be the end of the ball game. This podcast
Yeah.
was going to end up being a write-off. But lo and behold, like usual, I've bounced back and we're ready to go. So if your week was good, my week was good. The stock market as a whole week, we might as well cover what happened in that. Let's get into it.
Jump right into it.
And since you're the leader here, you're the boss, you're the guy, El Jefe, you're the man. So I'm going to let you run the show like usual.
So how did the markets fare this week? Did they blow up? Did they crumble? Or how did it go?
They actually did both of those things.
Really?
Early in the week, they did some crumbling. And then to close out the week, they bounced back significantly on Friday. And we recouped a lot of the losses and found ourselves basically back at par again, which we've been talking about for a long time.
Yeah.
It's a very toppy market, but it's not that there isn't winners out there. And if people have been paying attention on my Instagram, dr.kayfabe, you can feel free to follow my Instagram. I've been posting photos of a portfolio that I've been working on, where when you see the markets in comparison, and I talk about, the winners or the ones that you need to be picking, is maybe best of breed, but I would say probably the companies that have the least run recently but still have all that upside. A lot of companies really just get drowned out with the noise. So many companies are doing so many things that there's a lot of companies that didn't get that run in 2017 that they probably should have, because everything was running. So a lot of stuff didn't get the numbers that they wanted to. But this year in 2018, while the markets, the Dow, the S&P, all that stuff, around 2% growth so far, nowhere near last year's 20+% growth. I've seen in my Instagram photos that growth is out there. So if anybody wants to go take a look at that, you feel free to go take a look. That's since the start of 2018, just to show that there is some nominal money out there still in the marketplace. Do we want to tell people what I'm actually in so they can look at? Because I don't ever show what I'm in.
No, you don't. Should we keep it a secret?
I'm going to get out of everything on Monday because I'm going to restart and I'm going to show everybody again.
Sure. Why don't we tell our audience what you are invested in?
Okay, so completely not diversified properly. This was a portfolio where I was buying some stuff as it was coming down. So I was dollar cost averaging my way into a lot of positions. It was a lot of companies, like I said, that I really liked that didn't run in 2017 or didn't run enough, where I thought this still seems undervalued compared to where a lot of PEs in certain sectors, or PEs just across the marketplace, seem to be going. And we've talked about this. The price to earnings has seemed to find a new trading space, a place where it's a lot more comfortable, and it's a little bit higher than it used to be. But I attribute that to the fact that people like us and the news just in general is much more readily available, and the world's a lot more global. So everything in the marketplace is pulled together. It doesn't matter if you're a company in China or mainland United States, you're doing business basically everywhere, right? So
you are, yeah.
There's a lot of companies that still have a lot of growth to go. So taking consideration, diversification was not here at all. This was just me playing off things I thought were ready to run. Some of the companies that I was in, if you take a look at, the only one that's down, when you look at the red, that's T-Mobile. I purchased that T-Mobile with the idea that Sprint merger is going to take place. I still like the merger. I don't like the merger on Sprint's end as much as I like it on T-Mobile's end. I'm down a little bit, bounced back a couple percent on Friday. But the ones that are winning, and this is just a few of them, we've got EA Electronic Arts, Lear, a company that makes seats, aftermarket seats and stuff for vehicles. What are some of the other companies? Activision Blizzard,
Yep.
I'm in
Micron.
exactly. Micron doing amazing things this year. So when you look at that, again, the diversification isn't there for a proper portfolio. So I don't want you looking at that and saying that's some sort of example of what you should do. I definitely don't want you looking at and saying, hey, well, he was invested in this. I just told you I'm getting out of this on Monday. I'm taking my money off the table as far as the run goes because I think things have turned out really well. But I also think that there's still room to run for other companies. I'm going to reset tomorrow and find 7 new companies. I'm not going to step into the T-Mobile position just yet because I still think there's quite a bit of upside, only being down. I think I'm 5% down or something right now. Everything else, though, doing phenomenally. So, yeah, we don't really share that information very often.
No, we don't.
But
no.
we're up 18.5% in that portfolio this year.
What simulator do you use?
Well, I use the Investopedia one, but the thing I don't like about it is the fact that when you do the simulator on Investopedia, like you take a look at the gains so far this year, it's like 18.5%. The problem is they don't include dividends. And all of my companies are S&P 500 companies, most of which have a dividend. So I'd actually probably be closer to like a net gain of like 20%, 21% if we were including the dividends as well. But since we're doing it on Investopedia, we're not really able to do that. So you're going to have to go out and do the math for the dividends on your own. But I definitely recommend anybody at home that's either thinking about getting in the market or just following certain companies, don't necessarily do it in your actual trading account. Go ahead, set up a simulator account. You're not going to be able to do the same things, obviously, that you do in an actual trading account. It's going to be a lot more simplistic, but it gives you an opportunity to follow along with a lot of companies and see what things are doing. And it's a good way just to show your friends that you know what you're talking about. So there you go. So that's what we're going to talk about as far as the markets goes. The markets didn't do much, but we're doing quite well. Dow Jones closed the week 24,635, down 0.5%. Like I said, it was down early in the week. We bounced back on Friday a little bit, but we're still very toppy, right? S&P 2734, up 0.5%. There you go. Nasdaq 7554, up 1.6%, and the TSX 16043. That's really the markets as far as they go. Gold continues to sit around 1300 at 1295. WTI oil finds itself back down in the range we were talking about, $60 to $65, as it continues to come back to some sort of normalcy, because
sweet spot.
Yeah, I mean, supply is up, right? I understand consumption is up as well. And the retail price, we've talked about this, that the actual inflation in the retail price isn't really that egregious when you talk about, if you're looking at a 30 or 40 year actual span, right? It's not really that bad, but the actual price per barrel, 65, 64, as that continues to come back to reality, I guess you'd call it.
Yeah.
Bitcoin, speaking of reality, continues to bounce around in that $7,000 range, 7712 right now. Are you ever going to get back to that 18, 19,000 we saw in December?
I don't know. That's slim pickings there. I don't know if they'll ever make it back up that high.
You continue to hear people coming out and just completely negating anything that Bitcoin has to do for value. I mean, and you've got to take into consideration where this is coming from sometimes. I mean, this week we had Jimmy Wales, you know who that is? He's the founder of Wikipedia. He came out again, and he was another one that's basically rebuffing the idea that Bitcoin has any actual value to it whatsoever. It's any more than just a pipe dream. It's something that people want. They want to believe in. And when markets are really good, people unfortunately buy into everything. You remember the .com bubble. Everything was up. People saw the advent of the internet. Then basically every company that was a .com had venture capitalists throwing money at it, even if there was no actual business plan on how they were going to end up turning some type of revenue, if they even made revenue back then, into actual EPS. We need EPS gains. We need you to be making actual net income. So you've seen that back in 2000 with the .com bubble. We see it again now. Things are doing well. People like moving their money around. Bitcoin is new kid on the block. So it's interesting. People are curious, but as far as an investment goes, I think Bitcoin at this price may be a little more realistic, but still the implementation, I don't see it. Obviously, we've seen with the blockchain technology that's starting to take hold with a lot of companies. Bitcoin seems to be the laggard in that pair and probably is going to get left well behind as blockchain gets implemented across the board through companies in many sectors. Bitcoin's going to struggle to continue to try to find some sort of headspace against actual fiat currencies that do all the work Bitcoin claims to do anyways. And I'm a big proponent of government hands being involved in the monetary system. I think it's important.
Very important.
I think a lot of people really out there don't like quantitative easing and the idea of quantitative easing that took place. They say a quantitative easing was a failed project. Personally, I say look at where we are now. Look at where we were before the quantitative easing and the historical lows in the interest rates. I don't think quantitative easing actually failed at all. I think it helped boost the marketplace just enough to get everybody remembering just how strong some of these economies are and how strong some of these companies are, and stop a lot of those companies back then from being well oversold. They were well oversold and undervalued. Now we're getting back to a lot more realistic valuations, and people's sentiment in the marketplace, especially in the United States, is very, very high. Yeah. So, and that's great to see. You have a great economy, you've got great companies. Don't let the trade war noise that's filling the media right now, because there really isn't much else to talk about, stifle the fact that your money is in the corporations that are doing business. Go out, find the big dogs that are going to run, and hitch your wagon to them. I mean, there's just no other two ways to put it, but it's going to take some homework because, as you can see, the market this year as a whole compared to last year, the growth 2-3% so far. Last year, 20+%. So you're going to have to find significant select winners as opposed to being able to just buy indexes and rely on that. So we're kind of past that point as everybody's pushing the ceiling on what's tolerable price to earnings, because price to earnings in a lot of sectors is really, really high compared to historical averages, right? But again, maybe that's completely changing. Maybe people see it a different way and we're able to forecast out much further than we thought because news is so much more readily available.
That's true. That could be a big possibility.
Absolutely, right?
Well, that wraps up the markets. Let's move on to economy. I thought this was an interesting story. The EU and Canada have filed claims with the WTO against the United States. So what could this mean in the grand scheme of things?
I think it's kind of just like this cat and mouse game everybody's playing. So steel tariffs came into play this week for the EU, Canada, and Mexico, because obviously we didn't get a NAFTA deal done, right? So they wanted a NAFTA deal done. I think May 31st was the deadline to get it done, or the tariffs were going to come into effect on the 1st. So you're getting some counter tariffs from Canada to the U.S. There were some counter tariffs from Mexico to the U.S. Japan's threatened some tariffs. China has mentioned that they offered that $200 billion in extra agricultural purchases a couple of weeks ago. They're potentially taking that off the table if they can't come to an agreement with the United States on the steel and aluminum tariffs, the 25 and 15. So there's a lot of countries out there, and the EU obviously was a conglomerate of countries over in Europe that they're mad about this, but they don't understand that the United States adds so much more to their economies than they add to the United States. When trade surpluses are so unbalanced, when one side wins the deal every time, we need to find a way to come back to the middle, because you're eventually just going to set the precedent. And I think the U.S. actually has over a long time now, that while they're the big dog in the yard or the bully in the world or whatever you want to call them, they get pushed around when it comes to trade because they help a lot of countries that aren't maybe doing as well or aren't as affluent or don't have the same resources that the U.S. have. That's got to stop. The U.S. has such a serious trade deficit, and I mean, just the deficit period is ridiculous and growing every year, that this needs to be turned around somehow. I think President Trump's doing a really good job. So the big deal is that everybody is going to do this. As these negotiations go on, you're going to see the scrambling take place because nobody's really pressured these issues before. Previous administrations have kind of let these things just continue on, and they've dealt with other things internally. Nobody's wanted to ruffle feathers with some of their biggest trade partners. The US, Canada, China, these are some of the United States' biggest trade partners. Donald Trump has had no issues whatsoever getting involved with these countries and saying, look, like he told Trudeau this week, he said if the NAFTA deal doesn't work for the U.S., then the deal won't happen. So you do with it what you want, but the fact is the United States definitely calls the shots. They have a lot more to lose by signing bad trade deals in the future. They're setting a good precedent now, and I think that's something they need to follow through on, regardless of the noise in the media. We heard Trump come out this week, I also in a tweet, and mention that that Canada has a really good trade surplus while trading with the United States. They do much better than the U.S. does on the trade end with them. And Trump kind of insinuated, he didn't say outright, but he asked a question at the end of the tweet, lumber from the U.S.? Question mark. Obviously, one of Canada's big exports is lumber, and the big importer of that lumber is the United States. Trump insinuating that maybe lumber from the United States should be more readily, available or produced or processed or whatever you want to call it and used as opposed to importing from Canada. So he's definitely putting Trudeau up against the wall and saying, like, if you want to be difficult about all this,
I can play hardball.
We have a lot more leverage than you. Yeah, we can play hardball. We've got the leverage, right? So the EU didn't just, EU and Canada, they both filed these WTO challenges against the US tariffs. But the EU also filed a WTO case against China for undermining the intellectual property rights and forced technology transfers. Because that rumor's out there a lot. And I don't know how much we can substantiate the rumor, but you hear it a lot that China goes to other countries and other companies in those countries and basically says, if you want to do business in our country, we're going to need to take some of this technology that you've got so we can have companies start doing. And who's going to say no? You've got plus 1 billion people over there.
That's right.
It's going to be big business.
It's a big market.
It's a big market, right? It's really difficult to get boxed out of, but you kind of have to play ball with China. And unfortunately, those trade rules that China's working with aren't the actual World Trade Organization rules and the rules that everybody else plays with. So we've seen the US come out and challenge China on this intellectual property issue. Now we're seeing it from the EU. But everybody seems to just be bickering back and forth. Like, this is going to be a non-stop issue. It's going to happen next week too, right? We've got,
that's right, yeah.
There's an issue next week that's obviously going to drum this up. The issue from next week that we're going to talk about here in a second is actually going on this weekend already, and we're having a lot of murmuring that nobody's really getting along too much. Yeah. So you're going to hear it. There's no earnings. There's very little news. There's nothing really huge going on unless we have some sort of big news. There's nothing on the horizon that we're waiting for. This trade war thing is taking over the media, and it causes a lot of people to be really trepidatious, but they're all going to work it out.
Oh,
they're going to work it out, and the U.S. is going to find themselves getting a little bit more percentage on all these deals than they were getting before. They're probably not going to get the hard line numbers that they're trying for, but they're definitely going to come to some sort of agreement where they do benefit a little bit more, and rightfully so.
Right, for sure.
Rightfully so.
Let's talk about the G7 meeting in Quebec.
Yeah, so that's what we're talking about. So the finance ministers from the 7 countries, so that's Italy, France, Japan, Germany, the United Kingdom, Canada, and the United States, they're already meeting. So but the actual leaders of these countries are going to be meeting in Quebec late next week. And you can only imagine the 6 other countries and Donald Trump are probably going to have some heated exchanges when it comes to a lot of these steel and aluminum tariffs. But these discussions need to take place, and it's quite apropos that just right now in the middle of all this, while the U.S. is doing all that, and maybe another president wouldn't even do this, and he probably wouldn't, but it's quite apropos, I think, that the guy that's in charge is someone who's going to go in there and take no guff. He's been in enough boardrooms making hard decisions his entire career that being the president of the United States probably isn't even the toughest job he's ever had.
No.
You can imagine, these other leaders at the G7 summit, they're going to really have to they're really going to have to come in prepared and ready to battle, because he is going to be combative. He's taken a hard line on a lot of these policies. He wants this trade surplus thing to definitely start to give at least the U.S. a bit more of an advantage. Yeah. Like, he's never going to get out of some of these deficits. Obviously, China buying from the U.S. is going to go on at a much bigger number than the U.S. buying from China. But the deficit needs to move a little bit. Hence, China agreeing and then reneging on a $200 billion agriculture purchase every year, right? So yeah, it could be really interesting next week. And we could see the market really jarred by what starts to come out of there, because there's going to be a lot of rumors and people making innuendos and statements about what's going on behind closed doors. But the fact is this is just a great negotiating place for people to get together and work this out. And hopefully we come out of the G7 with probably not NATO fix or NAFTA fixed, but you're going to come out of there with some sort of olive branch. Someone's going to go in there and realize that hardball, why do we have to do it? Honestly,
yeah.
We can come to a negotiation for the betterment of both the countries, whatever the countries are that are involved. But Trump's definitely got his back against the wall in regards to 6 other countries being against him, but I don't think that shakes him at all.
No, Trump doesn't seem like the guy that backs down under pressure or intimidation.
No, not at all.
I think he thrives on that. I think he gets his jollies off a bit.
Oh, he totally does.
Yeah.
Yeah, he's an alpha male leader. There's no question about it.
Yeah,
He's going to dig his heels in. He's not going to renege on any of the stuff he's asked for already. And you can imagine it's going to be 6 versus 1 inside a good majority of those meetings, and he's going to be just fine standing on his own.
Oh, for sure he is.
But the markets next week, as the news starts to pilfer out, might take a hit because it's going to be negative, especially at first. As all these countries first touch base, there isn't going to be people coming to the table immediately and just saying, oh, you're right, let's fix this, we're totally willing to work with you. You're going to have everybody taking a hard line for their own country's best interest first. But I'd like to think coming out of it that somebody is going to look at the numbers and say, you know, Donald Trump's kind of right. And if we want to keep this really good trade partner of ours, what's the harm in 5 or 10% going their way as opposed to our way all the time?
Exactly.
Yeah, keeping your solid trade partner allies out there in the world seems to be, I mean, you want to do that because everything that gets brought into your country, the less you have to pay for it, the less corporations have to pay for it, especially if they can't get it made in the country that they're in. It's going to make things better for those corporations, and they're going to have a chance to grow, which is going to help those economies grow.
That's right, yeah.
So the EU, I mean, they definitely need it. They've got some economies, Germany obviously, that run rampant over there, do fantastic numbers, but you've got a lot of economies in the EU that don't make any money.
Yeah,
They're basically just an anchor to the EU. They need as many good deals as they possibly can. Why not work 10% out and get your trade partner back on your side so that you can open up the pipelines again and everybody can thrive, especially right now when the global economy is totally thriving.
For sure. So why don't you give us the rest of the rundown on what's going on in the economy?
Okay, so in Canada, we'll start there. The Canadian economy expanded 0.3% in March. That's a nice expansion.
That is.
Obviously, the Bank of Canada met this week. They kept the overnight rate at 1.25%, but there was a little chat that they sound like maybe in the July meeting they're going to bump it up another 0.25%. I really think they're going to take a look at all the Canadian economy numbers before they do that. I really would hope Stephen Pallaz isn't gung-ho about just raising it for the sake of raising it, much like we were saying about the United States, right? We don't want them raising rates just because they feel like there's a timetable to do so, right? You come out of this as smoothly as possible because you're never going to revisit, or never, hopefully in our lifetimes, revisit these historically low interest rates. Once they start to move up, they're going to continue to move up, and then they're going to stay there. But we don't want to force them up and cause a jar in the economy.
It's pretty devastating.
And we were talking, was it yesterday or Friday? We were talking about how we don't want Canada, we're Canadians, we don't want Canada looking at themselves as if they're a parallel with the United States.
Because we're definitely not.
These two economies are not the same at all. So, speaking of that, the Canadian economy, like I said, expanded 0.3% in March. That's really good. Canadian expansion. Hey, there you go. But the problem is it's down 1.3% year over year. So regardless of March being good, Stephen Pallaz is definitely looking at the bigger numbers, including some of the real estate markets here that are so overpriced.
Oh, yeah, for sure they are.
Or, I mean, how they're not considered a bubble, I'm not entirely sure. But I don't know if they are really. Maybe in the markets that people live in, or maybe people can justify it.
Maybe, I don't know.
But when you look at it, the disparity between prices in Vancouver and Toronto compared to other major cities across Canada, we've got enough things going on here that to look at us as a parallel to what the U.S. is doing just because we're, in close proximity to the other country, I think would be foolish. So Stephen Pallaz, 1.25% it's stayed at now. I would imagine in July they're going to do some serious dissecting of these numbers before they come out and definitively raise this interest rate another 0.25%. I think that's the only way they can do it. They can't be a gunslinger in this. you're not going to drop it again. That's the thing. You're not going to go to 1.5 and then 6 months from now decide to take a 0.25% back off. These raises are going to continue to go up, and they're going to stay where they're at until they find a nice healthy spot. We're worried about too many things in Canada that aren't comparable to the growth we're seeing in the U.S. The U.S. definitely has a few more raises scheduled this year.
Yes.
That we know. But in Canada, we probably need to take this on a much slower scale. Like, everybody just breathe, take in all the information, forget about what other countries are doing, worry about your own economy. Canada isn't seeing the kind of growth that's sustainable. We saw jobs growth last year was great, but unfortunately the actual economy isn't growing on the level that I would say would justify ramping up interest rates even more, because I don't know if we're actually doing well enough to justify higher interest rates. We still seem to need to get our footing, whereas the United States, they have their footing definitely. Their footing internally is so good that they're out ruffling feathers with all their trade partners.
Exactly.
Everything in-house is doing great, and we're going to cover some of those numbers. Over in the EU, speaking of which, German unemployment, 5.2% in May. That's the lowest number since reunification of East and West Germany in 1990. So unemployment over in the biggest economy in Europe, the manufacturing economy, the big one, Germany definitely runs the show in the EU. And Germany's doing great, obviously, because not only do they basically run the EU, they're the ones everybody looks at, and they're the country that thrives, but their unemployment continues to go down. So things are looking strong in the right countries, the countries that prop everybody else up. But unfortunately, the EU, there's a lot of laggards in there.
Oh,
so,
for sure.
Yeah, the German economy doing well. Other people, there's a lot of stuff going on in Italy right now, this election and stuff. There's a lot of things over there. And it's just when you have so many countries all put together, you're always going to have this issue. Certain countries just aren't going to bring as much to the table as other countries do. And Germany and France have kind of put themselves in this position where they have to carry a lot of these other countries, unfortunately. But Germany in and of itself doing fairly well on an unemployment standpoint. So let's hope all of that means that the EU continues to stay strong, as Germany is definitely the bellwether for it. Non-farm payrolls. Now, this was probably the thing that put things over the top on Friday. May non-farm payrolls up 223,000. They were expecting 189,000. That's a huge beat. Average hourly earnings is up 8 cents to $26.92 an hour down in the United States. That's the average wage. That's a good wage down in the U.S. Unemployment, again, a huge number, 3.9% unemployment last week and the week before. Unemployment's been sitting at 3.9, which is a ridiculous number.
It is, when you think about how many people are living in the States.
And it was estimated to be 3.9% again, and it fell to 3.8, the lowest level of unemployment since 2000 in the United States, as that number continues to get better and continues to beat even analyst estimates for it. April construction spending up 1.8% month over month versus a 0.9% estimate, so that doubled the estimates. And the construction spending for the year so far in the U.S. up 7.6%. That's doing really well. Obviously, PMI manufacturing index 56.4. The estimate was 56.6, but I mean, it's pretty negligible, a 0.2 in there.
Yeah.
We know the growth is going on. ISM May manufacturing index 58.7 versus 58.2 estimate. Prices are up, as 79.5 was the number versus 79.3 estimate. So obviously, a little bit of inflation taking place as prices go up, but new orders are up as well, which means they're doing more business, which can justify hiring people at a little bit of a higher cost or paying a bit of a higher price for whatever components you're using. So new orders 63.7 versus a 61.2 estimate, and employment in the manufacturing sector 56.3 versus 54.2. So the numbers all continue to trend upwards. And if you want numbers that aren't trending upwards, we go back to mortgages and the housing market, as MBA mortgage applications continue to trend lower. The composite index, the purchase, the refinance index, all down again this week. 6-7 weeks in a row for everything being all down. We've been talking about this. right? Like it's just, they had their run. People are getting a little more trepidatious. We're coming off really, really big highs. So when you see these numbers coming down, you also have to remember they're coming down from the mountaintop. So while we're not at the base right now, we're maybe at the summit before the peak now, but you need to still understand that the housing industry as a whole, and we've seen it with some of the earnings, last week's Toll Brothers earnings, right? You see it, and it's going to end up continuing to be that way where lending isn't what it used to be. People with bad credit, people that don't make enough money, they're not going to get the money that they got in 2007 where money was free flowing. There's not as much leverage out there. Banks are a lot more strict as far as freelancing and just giving money to anybody. If you're good, if you've got lots of good credit, make good money, you're going to go in and be able to get it. But a lot of those people that got it in 2007, they're SOL. They're going to have they're going to have to keep renting. So mortgage applications continue to be down across the board. And here's another story we talked about last week. We were talking about housing prices across the United States, and we said, I believe it was 20 of the top 32 cities across the United States up double digits. We talked about some of the big gainers, San Jose, Las Vegas. There were some really big cities are growing at exponential numbers in the 20%. But you look at the Case-Shiller home price index, and it was up month over month 0.5% versus a 0.7% growth estimate. So overall, housing prices in the actual United States as a whole aren't growing at the clip that they're estimating it at. But in some of these cities that are very affluent, like when you talk about San Jose, I mean, it's so close to Silicon Valley and San Francisco that this is where a lot of really wealthy people want to move to. So proximity-wise, of course, housing prices are going to increase, and we're seeing that. But across the board, housing prices still a little bit below what the estimates are. So if you're looking for a place in Iowa, you could probably find yourself a nice farm. I heard China's going to be like $200 billion worth of more agriculture, right? You could start yourself a little wheat farm.
There you go, yeah.
Iowa might be the place to go. So you're seeing it there. Housing prices up in the big cities, the cities that are growing, but across the board, still not making the estimates. Red Book chain store sales up 4.3% year over year. It was up 4.1%, I believe, for the month of May. People are still buying stuff. They're having no problem out there buying things. And we see that in the earnings that have been reflected in this earnings season with a lot of retailers. From Walmart and Home Depot all the way down to Gap, Abercrombie and Fitch, Nike. It doesn't matter who it is. It seems like retail, the stalwarts of retail, continue to hang on somehow. Somehow, retail continues to hang on. That, my friend, is what the economy did this week. It is what it is.
It is, yeah.
Yeah, it's just the same thing week after week. We seem to address this trade war issue, and then we go into all these numbers, the internal numbers from the United States, and it's difficult to come away from those numbers feeling anything but quite jovial and realizing that things, while they are a little toppy in the stock market, while they may seem like the economy is driving a little too fast, it's actually doing really well in so many different segments that I think having a really good outlook on the future is probably still the healthiest way you can go about doing your investing right now. Maybe be a little trepidatious with risk, but you're definitely going to have to go out and pick winners. You're not going to be able to just take the indexes.
Do your homework.
Yeah. There's nothing wrong with doing your homework. It's good for your health.
Exactly. All right, let's move on to headlines. There's not too many, but we'll give you what there was. So Jamie Dimon came out and rebuked claims comparing 2018 to 2007. Why don't you go into further details and tell us why you did that?
Okay, so this is what we were talking about with the housing industry. So this time, coming out of this cycle, this upcycle, right? So it's been about 9 years, and we've basically seen about 20% growth. But previous cycles, when we've seen serious downturns, in the same time frame, we usually get closer to 40% growth. So while we're seeing the growth taking place and people seem to be enjoying it, things are doing really well, the economy's doing really well, it's not the it's not the abrupt amount of growth that we're actually used to coming out of a downturn. So in the last 9 years, we're still about halfway. So Jamie Dimon actually compared it to being in the 6th inning as opposed to bottom of the 9th as far as expansion goes in the economy. He basically said, bad capitalistic policies before were really stifling a lot of stuff in the 9 years, and some of that now with the new administration is starting to be rectified, obviously corporate tax reform and the like. And he said people who compare today to 2007 don't really realize that banks are so much better capitalized because of the rules, the Dodd-Frank stuff. And overall, there's just a lot less leverage in the system because everybody who can do lending remembers the subprime mortgage crisis and understands that when one domino falls, a bunch of dominoes start falling. So you still got to keep that certain sect of people who don't have the credit and don't have the earning potential or earning power to be borrowing money from you. Because if you let everybody do that, eventually people are going to start defaulting and you're going to drag everybody down with you. So banks have a lot less leverage in the system right now, way better capitalized. To compare it to 2007, I mean, when you look back at 2000, not the time and place when you live in that moment, because we didn't understand what was actually going on. But now looking back, you can deduce what that subprime mortgage crisis was, where you're bundling a whole bunch of B-rated mortgages with AAA mortgages, trying to get the rating of the entire purchase to be up a lot higher. That's not allowed anymore. So we're not seeing any of that stuff at all, right? So things are actually doing quite a bit better than 2007, 2008 on the side of leverage and capitalization. Dimon thinks it's going to actually continue to grow economically. Hopefully he's right. I would tend to agree. He's a fairly smart guy running JP Morgan Chase. So I would probably listen to him than a lot of the naysayers and contrarians. He has a first-hand look at his books, right?
Yeah, he might know what he's saying.
He might. He's been all right.
Yeah.
He was one of those banks that actually didn't need the bailout when bailout money was there.
Like, yeah, we don't need it.
But they took it because Paulson said, everybody's got to take this, right? So that we show unification. But that company is doing phenomenally, continues to do phenomenally, much like Goldman. It's the financial services sector in the United States is doing really good, save for maybe Citigroup and Wells Fargo, but things are doing really well. Jamie Dimon sees it continuing on that way. I would concur. Jamie Dimon, continue being the man, sir.
Well, have you guys ever heard of Overwatch? Have you, Cody, ever heard of Overwatch?
I've heard the name, but it's a video game, right?
It is.
So it's Activision Blizzard.
Yes.
That I know. It's So is it on a console or is it a computer game? I have no
they're
idea.
on PC and console.
Okay.
But apparently, the Overwatch Grand Finals are coming up.
I have heard this.
So it's ramping up to be a huge event. So can you tell us how many people might be expected to be in the audience? And what sort of prizes can you win from this?
Sold out.
Sold out!
So the Barclays Center in Brooklyn, New York, sold out. Tickets went on sale in late May. They've sold out now. 20,000 people are expected to attend the championships, which run from July 27th to 28th. And the grand finals teams, the two teams in the finals, are going to compete for a share of $1.4 million. A lot of money to be spent on a game I've never actually even seen. 20,000 people want to go watch people play this live. I continue to tout that esports is a growing business, that the future right now is something that you can't even foresee. But I guarantee you that this is something to keep your eyes on. Between 5G, the Internet of Things, and esports, I'm almost not even exclusively focused on anything else as far as where my money goes. But the thing I would like to make sure people understand, I don't mean just look at Activision Blizzard. Don't look at EA, Take-Two Entertainment. I want you to go out and think of the component makers, think of the studios, think of everything that's out there that makes up the entire process, and find who in there is going to be the winner. Because it's not always just, oh, Apple makes a lot of great iPhones, let's get on Apple. You could get on Foxconn because Foxconn makes components. You could get on Samsung with Apple. Samsung could be your play because Samsung makes the OLEDs. Obviously, that's going to LG. But using the example, there are a lot of other companies that have their fingers in the pie of esports. Maybe don't get super hung up on the actual big names that have the games, that have these leagues. There's other ways to play it, but when you consider the amalgamation of AI, virtual reality, and the amount of viewers that esports already attracts, I mean, it's amazing. When you go on YouTube, the people that just stream video games, or they get ridiculous amounts of views.
Ridiculous, yes.
In so many different broad ranges of games. It's not just like one or two games, right? Like, it is a broad range of games. You know that companies are going to be making games to cater to these esports audiences. When you could draw 20,000 people live, I mean, honestly, wait till everything gets amalgamated. 5 years from now, you might not see a lot of people going to the NFL. You might not see a lot of people going to MMA because people get hurt. People get concussions. There's major insurance issues. There's major, after the fact lawsuit issues because of things that happen to people. With this, you're not going to be able to know the difference between reality and virtual reality, but you're going to eliminate all of those issues. There's not going to be concussions, injuries. You're not going to have to pay people $25 or $30 million a year to be a quarterback or to be a center in the NBA.
You might get some carpal tunnel from playing video games. Maybe, right?
I'm just saying, I would think of it in a much more broad time horizon and think of how everything's going to come together. I was talking to my wife about this, and I showed her my phone. I was just using the example of the phone, and I said, imagine 15 years ago when you had your flip phone Samsung, that you were ever going to get a touch screen. Who had that idea? You would have seen it in a sci-fi movie.
Exactly.
Then all of a sudden it came out. Now you take a look at what my phone can do, and we still don't have 5G yet. Imagine where things are going. Technology is building exponentially over time, right? The compounding of technology's advancements are so vast that if you don't think that technology is eventually going to take over basically every facet of your life, including sports probably, I think you're probably missing the boat. I would say esports, that's a place where I would keep my attention, see where things are going, learn the marketplace. Honestly, when everything converges into one, I think esports is definitely going to be the winner coming out of this. I think we've seen that video games are the preferred pastime of the masses.
For sure it is.
Ask the theater business how they're doing.
Exactly, there you go.
Video games. Or maybe drinking. Maybe drinking in video games, right? Get drunk, play some vids. You know how it works.
So we have some big Canadian news. Kinder Morgan sold the Trans Mountain Pipeline to the Canadian government. How will this affect the pipeline going forward?
Yeah, so they got sick of worrying about this, right? So there was the issue between Alberta and British Columbia where Alberta got involved and said basically they were going to stop sending oil to British Columbia. Saskatchewan got involved in that. Trudeau tried to get involved in that. They've had tons of environmentalist groups and Aboriginal groups getting involved trying to block this Trans Mountain Pipeline from taking place. And Kinder Morgan wanted assurance from the Canadian government, not only that they were going to get the ability to build it, they were going to get all the permits and licenses to get it done, but the Canadian government was going to assure them that any type of break in service where they can't work because picketers or whatever the issue is, that they were going to then reimburse their shareholders for the losses, or they were going to stop the project. They had the leverage to do so. The Canadian government decided they're going to buy into it, which I think is a great capitalistic move by Trudeau. I'm not a great fan of Trudeau.
No, me
but
either, no.
I think this is a good move as he's taking the initiative and saying, like, we're not going to let this thing die on the vine. We think this is a good idea too. Yeah. So be damned to the people who don't think this is. And I would imagine as the federal government gets involved with this, it's going to be a lot harder to block the building of the Trans Mountain Pipeline. So they paid $4.5 billion for it, which is a great deal for Kinder Morgan because they hedge themselves out of massive write-downs, right? Like every time this project gets stalled or projects get canceled, you got serious write-downs. Enbridge and TransCanada recently have suffered some serious write-downs from canceling pipeline projects. The breakdown of the $4.5 billion is $1.1 billion for money that's already been spent by Kinder Morgan, $3.4 billion for the existing pipeline, the infrastructure that's already there, and some consideration for future profits that they might garner off that. I have heard people say that Canada probably overpaid for it, but I like the capitalistic initiative. Let's see what Trudeau can do with it. Do I want it to be in government hands? Not necessarily, because I'm not really a socialist, right? Like, I would like corporations to be running these things, but I can understand why Kinder Morgan's stepping out, and I do think as a one-off, one-time sort of a deal for Canada to step in and try to take control and get this thing done, It's needed. It has to be done. Our oil and gas industry is a major player in our economy, and it's struggling. So some of these pipelines, this issue specifically, needs to get rectified. And I would imagine the federal government being involved is going to find some rectification.
Oh, I think so too. So why don't you just give us the rundown of the rest of the headlines, and I'll let you take over from here.
You're going to let me take it?
I will.
Have you been in control up until this point?
I always have been in control.
Have you?
Oh,
I've been being puppeteered through this thing, hey? So, the World Cup's coming up this summer. You know what the World Cup is?
Yes, I do.
It's soccer, or football if you don't live here. But it's soccer. And last World Cup, Nike led with the amount of sponsorships they had for the amount of countries that were wearing jerseys made by Nike. This year, much like in the footwear business, where Adidas is making significant headway on Nike, Adidas has taken back over the lead with sponsorship. They have 12 of the 32 teams under Adidas sponsorship, and Nike only has 10 of 32. Adidas has Germany, Spain, and host country Russia. Nike has Brazil, France, England. Obviously a very good spread of countries between both the companies. But Adidas has been doing so well the last couple of years. It's really tough to ignore it on a big scale. The way they've moved up in footwear, especially in mainland United States, they pushed past the Jordan brand and knocked the Jordan brand out of 2 down to 3, right? So you got to be paying attention to Adidas and watching what Adidas is doing, as Nike seems to be, and I know they reached a top price for their share a couple of weeks ago, and I get all that, but when you look at activewear, we're seeing Lululemon really encroach on a lot of Nike's business.
So Nike's kind of been the laggard lately.
In the footwear business, we're seeing Adidas starting to pick up, or already have picked up and taken quite a bit of market share. And then with big signings like this contract signing with countries from the World Cup, you see Adidas taking back the lead that they didn't have before. I'm liking Adidas. I'm not huge on Nike. They've had a lot of issues internally with people being mistreated inside their company and stuff.
Yeah.
There's just been a lot of news recently that I'm not really too keen on. I just don't see Nike as doing anything so innovative that wants me to get on board as a actual owner of it. Yeah. I like their clothes. I'm wearing Nike right now.
I was just about to mention that. You're wearing a Nike shirt.
I'm wearing a brand new Nike shirt, right? And I love Nike as a brand. I love their apparel. I'm probably more pro Nike, I would say, than Adidas, even though I do like Adidas as well. But Nike, as far as the catalysts that justify why the share price might go up, I don't think are there near as significantly as they are with Adidas or Lululemon. Obviously, Adidas traded over on the, I'm pretty sure it's traded over on the German DAX.
Yeah, I think so, yeah.
Oh, Alibaba affiliate Ant Financial has closed their latest round of funding. $10 billion added to the coffers. Ant Financial, which is going to go IPO apparently domestically, so in China, and on foreign exchanges, I would imagine the NYSE or the Nasdaq, is now valued at roughly $150 billion. Affiliate to Alibaba, going to go IPO on their own. It's going to be huge. Keep your eyes on it. I know that I'm going to be interested in reading the prospectus when this IPO is ready to be handed out to the underwriters.
Well, it'd definitely be the biggest IPO in history. We looked this up.
It's going to be huge. $150 billion valuation for Ant Financial. Alibaba, though, right?
Yeah,
right. And we've got Tencent doing the same thing as we move on.
Yes, we do.
Yeah, we'll move right on to the other major player in China. And Tencent Music, they've hired banks now for them to go IPO. They're going to spin Tencent Music off of the Tencent Corporation. They're going to take their own IPO. It's currently valued at $30 billion roughly. They've got plans to list in New York and not list domestically in China, or as of right now, they don't. They dominate music streaming in China. There's no question about it. They are the leader by such a significant margin that there's no other player that's even relevant. Over the winter, they traded 10% stake. Did you know that with Spotify? They swapped 10% stake with Spotify so that both companies were able to expand their reach more globally. So a lot of people are saying, though, that when Tencent Music does go public, the price that ends up becoming the IPO price is probably going to be relevant to where Spotify sits in the market at that time.
Okay.
So I don't know necessarily what the Chinese music scene is like. I don't know in comparison to the US. I don't know what kind of music they listen to. Maybe the Chinese are really into Bruce Springsteen.
Maybe
they listen to a lot of Chinese music. I don't know how often they listen to music. I don't know much about their culture specifically, but I know that Tencent has the actual space over there. Nobody else is encroaching on it. They run it. So if anybody's gonna win in the music service industry over in China, Tencent Music's already doing it. Taking it public is only going to allow anybody else who wants to get in on the ride, hopefully make some money. But you would really need to do some research on the history of the music industry over in China.
Definitely over there,
because they're well hedged into China. This isn't a global idea, right? Not yet, at least.
No.
But as of right now, where you're going to be putting the majority of your faith is going to be on Chinese music aficionados. Hopefully, hopefully there's a big industry for it. We know there's a big industry, obviously, over here. Is music's coming back over here. People are actually finding ways to make money in the music industry in 2018 when it looked like the music industry was done in 2010.
Oh, yeah.
Right?
Yeah.
So
as soon as you can download stuff, right? But now music's available everywhere on so many different platforms.
Absolutely. Right? And they're actually able to make some money, right?
They are, yeah.
iTunes makes some money. The Spotify makes some money. People are actually doing really well, and subscribership is growing. Obviously, Spotify growing at a really good clip. So there you have it. You have Alibaba spinning off Ant Financial into an IPO, and you got Tencent spinning off Tencent Music into an IPO. Two big heavy hitters over in China.
Massive.
Absolutely. And Tencent, again, when we're talking about esports, just because you're looking at games that seem like they're American from what sound like American studios, the corporation that owns a lot of those studios is Tencent. So definitely look into Tencent. Micron, on Tuesday, Micron was one of those companies I have in that portfolio.
That's right.
Just in case you didn't know that. I'm taking a drink of my energy drink.
Of course,
it's late on Sunday. We worked out. We did all this. There's not a lot to talk about, so I'm trying to find the bravado to really hammer home some of this news. Micron closed Tuesday at $62.83. It's a new 18-year high. Micron, again, I was in Micron, up 180% in the last year. They closed out Friday, 58.74. So definitely pulling back from that high on Tuesday. But Micron, it was one of the laggards last year. We talked, the Philadelphia Semiconductor Index destroyed the indexes, right?
Yes,
it was 36% up last year. But your big winners were, Intel and Broadcom. And you've seen some companies that really didn't make the kind of moves that other companies in the same sector did. I thought when Micron released their fourth quarter earnings at the end of 2017, I really, really liked what they said about supply and how they were going to be able to be catching up where demand was going to meet up, it seemed like, perfectly, and everything in accordance with that has said, that worked out because the share price continues to climb. I believe it was up 20% this month, 20-some% in the first quarter, 180% year over year. So
numbers don't lie.
Yeah, the numbers don't lie. But there were so many companies in the semiconductor sector that were running, and the ETF was running, that some people just get forgotten. And that's what I was saying, is that you go back into some of these sectors, find companies that aren't doing as well as they maybe should, justifiable to where their peers have done. See if there's a reason for that or reasons for that.
Yes, yeah.
But if things across the board seem to be relatively comparable, maybe you should start questioning why that company seems so undervalued compared to other companies, and you might find yourself buying something that's well undersold or way oversold, and you're actually going to end up making quite a bit more money, right?
Yeah.
So I thought that was a good move on me, buying Micron, and Micron continues to shine, but I'm going to get out of Micron on Monday. Microsoft and Alphabet, formerly Google, right? They crossed paths about 6 years ago. And when I say they crossed paths, I mean that on their way up to the very top, Google passed Microsoft's market cap. 6 years ago they did this. People thought Microsoft, a bit of a passé company, was headed on their way down the list of S&P 500 companies as other more innovative companies came into play, and we're using Alphabet as the barometer here. This past week, Microsoft passed Alphabet for market capitalization 6 years later. Microsoft up 40% year over year, more than 5 times the growth that Alphabet seen in the last year, on the heels of strong cloud growth, obviously with the Azure cloud program, reorganization of their Windows and devices groups. Microsoft is doing a great job streamlining their business. They're really hitting hard on the sectors that are growing the best. They know what they're doing. They've had great leadership and great innovation for a long time. They tried a few other things that didn't work, right? And they know better. They just cut bait and run.
Exactly.
You don't need to continue to pour money into something if you're going to be the number 6 company in the world, when Microsoft clearly could take the lead in certain places and be the number 1 or 2. And we see that with cloud. They're number 2, are they not?
Yes.
Number 2 to Amazon. So Microsoft doing phenomenally, passes Alphabet in market cap. What's the problem with Alphabet? That's the big question.
Yeah, I don't know. I have no idea.
You know, when I look at Alphabet, it's not that they're not doing well. That doesn't bother me. I actually really like their company. It's that they're so convoluted.
So many different sectors.
They just do so many different things, and it's so spread. The conglomeration, it's just too noisy. It's too tough to deduce exactly what I'm looking at and compare everything. It's just very broad.
It's a hard company to dissect.
Totally, right? They're doing so many things in so many different divisions on the future. How do I predict the future in all these different avenues? I know they're smart enough to maybe make it happen, but when I think a lot of people look at Alphabet, it's like looking at stuff in Japanese. I mean,
for sure.
I'm sure you can understand search. I'm sure you can understand YouTube. Maybe you can understand Google Music, or you can understand analytics on the internet. But when you really get into all the different things that they're working on, they've branched out into AI, autonomous vehicles. They're in so many different things.
Way down the rabbit hole.
So far down the rabbit hole, and still doing all these other things. Man, that's a lot of information to cover. When you can go to other companies that are far more streamlined, a lot easier to dissect, good word that you use there. And Microsoft, who's, like we said, done some reorganization of their Windows and devices group, made that a lot more streamlined. It's a lot easier for investors to look at it and stomach the idea of putting their money into an investment with a company where things are laid out a lot easier for you to digest. Fox.
This is what I like. I think this is
you
really
like this, eh? You brought this up to me.
Yes,
I didn't see this news.
I know.
Cody, did you see this news? News? What news, my friend? Fox has set a July 10th special meeting for the shareholders to vote on the $52.4 billion deal to transfer media assets to Disney. It's probably going to go through, right?
I think so.
I would imagine. I know we heard Comcast last week wants to do an all-cash deal. They want to pay a premium even above what Disney offered. Yeah. And I understand Comcast is trying to get in there. This seems like the deal that's probably and supposed to actually take place because it brings Marvel back together.
Exactly. This is what we want, people.
That in and of itself, right? If regulators have a problem with potential monopolies in the marketplace, then they should overlook that, because I need Deadpool and Spider-Man back with everybody.
X-Men.
Yeah, I need those guys back with the guys.
Yes.
And Disney does better movies.
For sure they do. They know what they're doing in the Marvel universe.
I'm not a big movie guy. I've seen enough of them. But when you look at the Avengers movies compared to the X-Men movies, Avengers are in the actual gear from the comic books. You got 80 plus years of art to draw from,
and not just use black leather
and then when you
costumes.
look at Bryan Singer's X-Men, everybody's in these generic black leather costumes. Stop trying to reinvent the wheel. It was already done well by people who are smarter than you, Bryan Singer.
Yes.
If you want to come up with your own stuff, use your own creativity and come up with it, but don't go into something and adjust it thinking that you're making it better, right?
Because you didn't.
Are you gonna walk into a museum and change a painting because you feel like your idea will make this Monet or this Rembrandt a little bit better?
That's right.
So think it through, right?
Yes.
They did well because people like the X-Men, but honestly, think of the X-Men in their Jim Lee gear from the 1990s with Disney in control. Regulators better get this deal done. Fox doesn't need to go to Comcast. It doesn't need to go to Comcast, right? I'm not on board with that at all.
Neither.
We need to bring Marvel back together. For no reason other than that, I want this to take place. Just so I can see the actual characters portrayed in the way that the artists originally intended.
How they deserve to be portrayed.
That's right. That's right. And done by Disney.
Exactly.
Hell of a good film studio. So CP Rail, they were going on strike. We talked about this last week. The locomotive engineers and the conductors, around 3,500 of them had a vote. 98% voted to strike. That's a Teamsters union over there. It's Canadian Pacific. They were not okay with the deal that was on the table from Canadian Pacific, and a day after the strike started, they've reached a tentative agreement and everybody's back to work. So another rail strike up here in Canada. These happen, it seems like, every year, but this one got resolved relatively quickly.
Quick.
Everybody's back to work, and the Teamster representative that came out said everybody's happy with the deal that was signed. So obviously they amended that original deal quite quickly.
For sure.
98% rejection, though. That's going to let you know that people aren't really feeling what you're putting out there. AT&T CEO Randall Stevenson, who's in the middle of a battle with the Department of Justice trying to buy Time Warner. That verdict from the judge is supposed to come down potentially on the 12th of June. They're still waiting for that. But he said he sees the T-Mobile and Sprint deal likely taking place because AT&T tried to buy T-Mobile a while ago, but it obviously got rejected from regulators because AT&T is quite a bit bigger than the combination of Sprint T-Mobile. AT&T says it's more of a, or Randall Stevenson, I guess, said it's more of a horizontal deal for these two companies as opposed to the vertical deal that's stifling his merger with AT&T and Time Warner. It's much more difficult for regulators to okay things when it seems like you're conglomerating and causing a bit of a monopoly to take place, even though we've talked about this, and I don't think AT&T and Time Warner being together is any type of monopoly. They just don't have enough market share in any of the divisions to justify calling it that. But Sprint and T-Mobile almost need each other just to survive and compete with what Verizon and AT&T are doing. AT&T and Verizon obviously both rolling out 5G in test markets right now. It's already rolled out in a lot of markets. Sprint and T-Mobile still probably a calendar year away from seeing that. They probably need to get together. Sprint probably needs it the most. And that, my friend, is the end of headlines.
That's right. On to earnings.
I was able to drag that out. I thought
you did,
we had a lot of just banter.
Mm-hmm.
Yeah,
because there wasn't very much news this week. No,
that was the thing, right?
Yeah, no.
Jamie Dimon basically coming out and saying that the big deal was to pump your brakes a little bit, thinking that things are so toppy, right? There's a lot more to go. Look at the history. Look at the numbers. And I mean, Kinder Morgan, I guess, selling their pipeline to the government of Canada up here is big news, but I don't know how much a lot of that resonates with our American listeners. So for us, it's big news. It's big news for the country to get involved. Probably reaffirms around the world how socialist Canada is, but it's some sort of move towards being capitalistic for the Liberal Party. So kudos to the Liberal Party. Trudeau can put a feather in his cap for all the mistakes he's made already.
So we only have a few earnings, which I was kind of amazed by because I thought earnings seasons were over. But no, we do have a few, so I'll let you take it off.
Yeah, the guy's trailing into the end of the earnings season. We have a couple of Canadian banks. Abercrombie and Fitch, that's ticker symbol ANF. The EPS was expected to be negative 56 cents. They beat that by 21 cents. And the revenue, $730 million, beat by $34 million. So they beat on both numbers, despite EPS expecting to be terribly low and still well in the negatives. The revenue, though, up 10.6% year over year. Hollister continues to grow, obviously, at a better rate than Abercrombie and Fitch does, but they're both having strong traffic trends. Comparable store sales are expected to grow across both brands between 2 and 4% for the year was the guidance. So it's not phenomenal growth, but it's still growth. And in a retail sector where a lot of companies just can't make it, Abercrombie and Fitch at least is keeping their head above water. That Abercrombie and Fitch closed at $21.77 to close the week. Costco, that's ticker symbol COST. Their EPS came in at $1.70, beat by 1 penny. Revenues of $31.6 billion, beat by $31.6 million. And that number's up 12.1% year over year. Costco, obviously, phenomenal. Very few competitors for what Costco does. They're all over the world, and they're growing as we look at comparable store sales. Comp sales were 10.2% up, and the estimates were for them to be up only 8%, so blowing estimates away.
Crushed it.
And you know how many analysts watch Costco, so if they're already assuming really good things for a company like Costco, and even they're not able to come close to what Costco actually does for numbers. Online sales for Costco up 37%, as we continue to see that with other companies like Walmart and Home Depot. Online is definitely something you have to be involved in, and you have
in this day and age, yes.
You have to be able to drive a lot of consumers into that online space so that they don't have to get up from their chair at home, because a lot of people just don't want to go to Walmart or don't want to go to Costco.
Or maybe just don't have the time, right?
Exactly. Or the means, maybe. So
that's true.
Online sales up 37%. U.S. comp sales, including gas, up 9.7%. Canada comp sales, including gas, up 11.3%. And internationally, up 11.8%. So Costco is growing across the entire brand, across the world. There are no competitors with Costco. No. It's very much a boring company. They're just selling things in bulk.
That's right.
But they're phenomenal at what they do.
Yes.
And nobody's breathing down their neck. Is it an investment I would say jump into? I'd say do research. I would always say that. It doesn't matter what it is. Even if I like it, I would tell you to do your own. You got to come to your own conclusions. But Costco, in and of itself, phenomenal.
What a great earnings call.
Great company.
Great.
Lululemon, you want to talk about great earnings calls. We talked about Lulu earlier, taking some of the sports apparel market away from Nike. They continue to blow things out of the water. Ticker symbol LULU. EPS of 55 cents. Beat the street by 9 cents. Revenues of $649 million. Beat by $33.4 million. And that revenue number is up 24.9% year over year.
Wow.
Really good at retail. The growth is coming on strong at Lulu. And when you look at it, you're going to say, hey, the trailing price to earnings of this, if I was to get invested in it, 64, right? That's a high price to earnings, trailing price to earnings. But you look at Nike, it's 68. So in reality, Lulu's still a better price, and they got a lot more growth on the horizon than Nike does. Nike's well saturated across marketplaces. Lululemon is just getting started, but they're going unbelievably right now. People seem to love them because you take a look at comp sales, it's up 20% in the quarter with a 62% increase in direct-to-consumer revenue. Comparable store sales, that's for stores that have been open over a year or more, is up 8%. So the traffic continues to grow. We walk past a Lululemon today, it's always full.
Always full.
Always full. Absolutely. The Bank of Nova Scotia, they didn't only have an earnings call, but they also had a little bit of a purchase that they made.
They did.
It was a really good purchase. This is interesting. The CEO of the Bank of Nova Scotia came out and said they've been looking at this for a while, and stuff like this does not come on the marketplace and become available almost ever. So when it was able to be capitalized on, they pounced and they bought it, and it's a heck of a way to hedge themselves into a specific affluent marketplace. Let's go through the earnings call. EPS of $1.70, beat by 3 cents. Revenues of $7.06 billion, beat by $120 million, and that revenue number is up 7.3% year over year. They closed the week 59.38. So in the actual earnings call, residential mortgages up 6%, Canadian banking net income up 5%, international banking, that's in Mexico, Chile, Colombia, and Peru, they're all over South America. That's in double-digit growth for all of these, for the Central America and South America countries. It's growing. We know they just purchased into a bank in Peru. Yep. That's one of the leaders, and they've got some of the biggest grocery stores. So they have banking inside some of the bigger grocers and stuff in the country of Peru. We know they just purchased, I think it was a 51% share of the biggest bank in Chile, right? It was owned by a family. They gave them the go-ahead to do that. And then here in Canada, they also made themselves a tidy little purchase this week.
They did.
This is good stuff. So they're going to acquire MD Financial Management.
What do they do?
Well, okay. So it doesn't sound like anything too fantastic, but you look at that acronym at the beginning. MD, physicians. That's what this is. $2.59 billion in all cash. So this financial service provider, they have 45,000 100,000 Canadian doctors and 65,000 members of these doctors' families that they're using them as financial services. So they're doing a 10-year collaboration with the Canadian Medical Association. So the Bank of Nova Scotia is gonna, this came in accordance with the deal. They're gonna put $115 million for the advancement of the medical profession in Canada. And in response to that, the Canadian Medical Association will exclusively promote Scotiabank as the preferred provider of financial services to physicians and their families in Canada for that same 10-year period. So they pick it up, $2.59 billion. This MD Financial already has $49 billion assets under management. Bank of Nova Scotia just hedged in really good.
Yeah.
They basically brought in a whole sector of well-off, high earners.
What a sweet deal.
And they're going to get everything pipelined basically to them, as the Canadian Medical Association is going to encourage physicians and their families to use the Bank of Nova Scotia as opposed to other financial services companies. This, I think, was a coup. The CEO loved it. I love it. They're moving around. They're doing stuff in Peru, stuff in Chile. They're doing stuff here in Canada. When you hear Steve Eastman a few weeks ago, before Canadian earnings season started with the financials, saying that he was short some Canadian financials or was looking at being short. Maybe he wasn't saying he was, but he was expecting to probably get into a short position. And I said this a couple of weeks ago when we mentioned it. I don't think a lot of outside investors that don't follow Canadian financials as closely as maybe we do here in Canada, because we see the news. It obviously TD or BMO news is going to kind of be predominant over JP Morgan or Goldman news, unless the news is egregiously huge. We understand that a lot of these financial companies that are doing great in Canada are well diversified outside of this country, maybe even more so than the majority of the American banks. So when you look at it, don't just look at Canada and Canada's economy. These financial companies were smart enough to start diversifying elsewhere into emerging markets, and they've all moved in different areas. We've seen a lot of companies, BMO and TD, move into the United States. We've obviously seen Bank of Nova Scotia start to move down into Central and South America. They're doing Royal Bank's obviously still the biggest one here in Canada. They're all over the place. These companies are doing a really good job expanding their broad horizons. I want you to look into it on a much more in-depth basis. Don't just look at what they're doing in Canada. That's probably the thing that you need to focus on when you hear what Steve Eastman says, because you'd look at it and be like, sure, they're really high priced. They just keep going up. That economy's not growing really well. Eventually they've got to kind of come back down to reality. Yeah. But there's other markets where they're driving in revenue, and they continue to expand into those markets. Big pickup at the Bank of Nova Scotia. That was a really good earnings call. And the Canadian financials had really good earnings again. What a big shock. And the last one from the Canadian financials, the Bank of Montreal, EPS of $2.20, beat by 8 cents. Revenues of $5.62 billion, beat by $240 million. The revenue number, though, down 2.1% year over year. So there's going to be the winners and the losers. Look at that number as a standalone. Get into the depth of the numbers a lot more egregiously. Don't pay attention to just revs being down year over year. The TSX approved a buyback of 20 million shares, or basically 3.1% of the outstanding float for Bank of Montreal. We talked about that last week. They were waiting on the approval. They got it. U.S. personal and commercial banking net income up 43%, as that's the big growth area for them. That's in the United States, like we said, right? Yep. Everybody's nice and spread out, up 43%. Canadian personal and commercial banking only up 11%, but I say only. It's a double-digit growth, right? Only, right? They're still doing very well. Wealth management up 12%. Capital markets continue to take a hit, down 8% at the Bank of Montreal. Hewlett-Packard, not Hewlett-Packard Enterprises. These are the guys that actually sell the printers and the hardware and stuff, not the guys doing the financial services and all that stuff. HPQ is your ticker symbol. EPS of 48 cents. That found itself in line with what the street thought. Revenues of $14 billion. It's pretty good for selling printers, right?
Pretty good.
$14 billion. That beat the street by $430 million. That's up 13.1% year over year. Hewlett-Packard, the smartest thing they ever did was split these two companies up. Again, way too convoluted. You're doing far too many different jobs in one company. This is a lot like Bill Ackman talking about United Technologies and wanting to split them up into the different divisions, right? Take Pratt and Whitney out, make all these divisions their own standalone companies because it's just too much conglomeration.
Exactly. It's better streamlined.
And then you have a lot of the different divisions have to prop up other divisions.
That's right.
You can take a look at what's the company that we look at with the cloud computing, where they bury cloud computing with a bunch of junk, and when you look at the actual division, it's up like 2% or 3%, but then you look at their cloud computing and it's up like 30%. I'm pretty sure it's IBM. I'm almost 100% sure it's IBM, but they bury it inside this division when, if something's growing that substantially, you really think you would kind of shine a light on that to show people that things are doing really well. Don't ignore this just because it's propping up a bunch of other things that are fairly stagnant.
If we were wrong about the IBM, put it in the comment and tell us what it actually was.
I'm almost positive it's IBM. If I'm wrong, I'd be hard-pressed to believe that out there.
Yeah, me too.
Feel free to leave a comment, though. Price to close the week for HP, $22.68. Personal Systems was up 14% year over year. That's commercial and consumer. Commercial was up 16%. Consumer rev up 10% in that segment. The printing segment up 11% overall. Total hardware unit revenue up 13%. The commercial division up 88%, while consumer division only up 4%. Supplies, because you need to buy that ink. It's ridiculously expensive, right?
That's crazy.
That thing takes like a mortgage to buy ink for a printer. Yeah. It's ridiculous. Up 8%. And the final earnings call of what was a fairly short week, but what I thought was a fairly entertaining podcast. Michael Kors, ticker symbol KORS. We saw what Tiffany did last week.
We did.
Right? Where's the money going? Everybody else in retail is just kind of trucking along. They're doing well. They're staying about where the economy's at. It's the growth is pretty much completely comparable. But some of these more high range items, we're starting to see them take off as obviously the people at the top end of the earnings scale in the world probably are well invested, and not only did they make all their money last year from their job, but they probably made that 20+% that the indexes did, right? So everybody's at the top got a little more money to spend. Michael Kors, much like Tiffany, the beneficiary of that. EPS of 63 cents, beat the street by 3 cents. Revenues of $1.18 billion, beat by $30 million. That revenue number is up 11.3% year over year. Good growth at Kors. Comparable sales up 2.3% versus the estimate, which was expected to be down 1.8%. So they really flipped the script on analysts there. They clearly were not taking traffic numbers properly, as Michael Kors is doing a heck of a good job. Sales and accessories, footwear, the ready-to-wear categories, and men's categories are all up, trying to combat, which was actually a surprise to me, some sharp declines this quarter in the Jimmy Choo brand that they acquired there last year, right? And has been doing really well for them. Bit of a sharp decline this quarter, but money obviously moving around in those higher level items. I think I might go get myself a Corvette. Nice. Or maybe a new purse. I'll go to Michael Kors and get myself a new purse. I'd look good with a new purse, wouldn't I?
I might have to get a purse and a new outfit, like a sundress and some shoes. Maybe, maybe a hat.
I bought a new sundress already.
You did.
I looked phenomenal.
You do.
That's the end of this week on Wall Street.
Unfortunately, it's the end.
It is what it is. I can't make more news.
You can.
Right? What are you going to do? Like, we need some of these companies to make a move out here. We're definitely waiting on the Department of Justice judge to come out and give us the AT&T Time Warner verdict.
We are, yeah.
Right? That's going to be the 12th of June, so that's going to be some news. The G7 summit, that's taking place next week. Again, that's going to really shuffle the deck in the marketplace. It's going to give us a lot of news. It's also going to give us a lot of rumors and conjecture.
Yes,
It's not necessarily going to come out with anything tangible, but we're going to get, at least these 7 countries are going to have a good launching pad for discussions. They're all going to be locked in a room. I think that's probably good for all of them. But there's no real news on the precipice we're waiting for. So the summer continues to roll on. We continue to lift weights and enjoy life. And we'll continue to bring everybody the news as the news unfolds. That sounds pretty good to me, right?
Right.
We'll see you again next week. I'm Cody.
I'm Anthony.
From Wall Street Breakdown. This was This Week on Wall Street. Remember, please do your homework. Don't go out there and make any kind of purchases off anything that we say. Consult with your professional financial advisor. we definitely are going to redo that Investopedia.
Oh, we are.
Yeah, we're going to redo that. And we'll show you how we're doing on our Instagram, dr.kayfabe. Follow me on Instagram. I'm looking forward to seeing if I can replicate the significant gains I've made in the first half of 2018 in the second half.
I have a sneaking suspicion that you will.
I don't think so. You really think I'm going to be up that significantly?
I don't know. Pretty close.
I think
so.
that was a bit of a coup on my end.
You are a pretty smart cookie.
I'm not too bad.
You do your homework.
I definitely do, but I think a lot of other professionals do. That's a pretty unreplicatable sort of a task. But I put it out there. I tweeted out to Goldman and BlackRock and said, "Hey, you want a prop desk job in Singapore? I'm your guy, right?"
Yeah.
So we'll see you guys next week.